Good afternoon, everyone. Thank you for joining us today for our Duratec 2026 Investor Briefing. I am Chris Oates, Managing Director of Duratec. This is the second investor briefing event we've hosted. We're very happy to see so many of you back here again. Also in the audience today is our Chair of our board, Mr. Barton Bryden, who's just here. We have fellow directors, Mr. Phil Harcourt, Mr. Gavin Miller, Miss Emma Scotney, as well as our company secretary, Dennis Wilkins. Just a couple of housekeeping events before we get started. In the event of emergency, the hotel will provide instructions on the PA system, and in the event of an evacuation, we're going to proceed to the nearest exits. And the emergency assembly point is actually on the corner of Hunter and Phillip Street, so that's where we'll meet in the event of emergency. We'll appreciate as well if everyone could have their mobile phones on silent. We're going to use them as well, by the way, with Slido, but if you could put them onto silent, and then and the Slido we're going to use for our Q&A session as well. So the toilets and restroom, by the way, are just out the door on the left-hand side. I think we might have all seen them on the way in. So we're going to have plenty of breaks as well, so just if you can save yourself to those breaks will be great. We acknowledge the traditional custodians of the country throughout Australia and their connection to the land, sea and community. We also pay our respects to the elders past, present and emerging. We extend that respect to all Aboriginal and Torres Strait Islander peoples here today. Looking at the format today, there will be 7 10-minute presentations followed by a Q&A session, and then after that we have a number of demonstration hubs. We'll have 1 here at the front and 4 at the back, and if you feel free to stay and ask all the questions you can of those people. The other bit we've got here today is Slido, so you can see up on screen, so if you can take your phone to slido.com and enter that password there, the Duratec 3103, and then you can ask your questions via that. You'll be asked to put in your company and your name, and then you can do it that way. You'll see other people's questions. You can thumbs up, thumbs down as you go. We also have 2 roving mics, so they're there if you want to put your hand up and just ask the question in person. That's also good. On to the panellists and speakers today. So we have a number of different speakers and we're talking about generally the sectors and the entities themselves. So with us today we have Greg Oates, General Manager of Pre-Contracts, who's also going to moderate the Q&A. We have Tristan Rees, Chief Operations Officer and one of the panellists presenting. We have Nigel Kroonstuyver, who's our National Energy Manager, and he's also going to present on the panel. We're lucky enough to have Tom Hutchinson and Phil Harcourt provide an update on DDR, and as both Peter Cox and Shane Katauskas unfortunately can't make it. We have Bill Eason from DXP Managing Director. He's providing an update on our DXP entity. We have Liam Holloway, Managing Director of MEND, who will provide an update on MEND and the new RGK acquisition we made recently. We also have Ashley Muirhead, our Chief Financial Officer, who's going to join us on the panel. And then we'll just move to the next slide and just a quick brief touch on the business history from my perspective. Today's session as well, by the way, is not about the usual results, so you'll see that they're not in there. This is intended to be a deep dive into the sectors that we operate. There's also no major project announcements, as they're always released when we sign them, so that's not what today's about either. After a solid start into the first half, we're going to demonstrate how we have positioned the business for sustainable, profitable growth well into the future. Our CAGR is still at 30.2%, which is driven primarily through organic growth, and only more recently we've had a few small bolt-on acquisitions. So moving forward, we believe we are well placed to deliver strong future growth through organic means, as well as continue those strategic acquisitions within each sector. So without further ado, I'm going to hand over to Greg, who's going to be one of the presenters, and then will also join us on that Q&A. So Greg, you're welcome to the mic for Building and Facades update. Thank you.
Thank you, Chris. Good afternoon. Thanks for taking the time to engage with us today. Greg Oates, Executive Manager. I've been with the company since 2011. So spent a fair bit of time there and really loving it. Had a number of senior roles during that time and currently have oversight of all the pre-contract activities from developing new business right through to tendering, estimation and then handing it over to operations. we'll have a quick look at the building and facade sector, the most exciting sector in the company. We achieved record revenue, 64.3 million, 20.2% gross margins for the first half of the financial year. This performance reflects our continued focus on the service offering and our ability to leverage people and systems nationally. The sector has a broad mix of projects, from remediation to heritage works to specialised construction. Heritage works are an ongoing focus in our area, and currently we're a month away from finishing a project, the iconic Paddy's Markets down in Haymarket there. It was a project that was overdue for maintenance to protect and renew the facade, and it's been a very successful project for us. And Ben Luff, who's in here, thanks Ben, that's been a wonderful project for New South Wales. This year we have increased the number and the value of projects in comparison to last financial year. And there is a trend in all the states that as our capability and skills are growing, we are managing to increase values and increase the number of our wins. With recent project awards and a strong pipeline in all the states, this sector is on the rise. So if we delve a little deeper, thank you, into the states. Queensland, very strong in heritage work. We also have a recent award of 275 George Street in Brisbane, and it represents the largest ever project win on the East Coast for us at over 35 million. This project started out as an ECI. If we go to New South Wales, always strong in New South Wales in this sector. We continue to maintain a high level of tendering activity and project awards. And an example of that is 363 George Street, Sydney. Now that's not to be confused with 275 George Street in Brisbane. It's a different award. It's 363 George Street, just around the corner here. And site activities will commence in June. This project has some wonderful facade elements, and if you go around the back of that project, you'll see some sandstone that needs to be remediated, and the team from Paddy's Markets will transfer their skills onto that project. ACT, we've had a record year in ACT. That is a strong sector for us there, and there are plenty of opportunities presenting for us. Victoria, there's a recent conversion of an ECI on Flinders Street, just outside the Flinders Street station. So that's another facade project born out of an ECI for us in Victoria. If we go to South Australia, recent completion of Telstra Weymouth and Air Apartments. We're currently working on an ECI for the same client as 275 George Street in Brisbane. So that ECI, when we convert that to main works, will represent the largest project win in South Australia since inception. So this area, this activities in this sector, we are getting capability and we're growing. WA, we're absolute leaders in WA in this sector. No one really comes near us. We're always getting our slice of the pie in there. Recent commencement at Curtin University following an ECI. And there's still plenty of opportunities in WA for us. Northern Territory, soon to complete the Northern Territory State Square Art Centre. That's been a wonderful project for us. Again, born out of working with the architects through a design phase, pricing it through that. And a little bit later, if you make your way down to the hub, Grant there will be able to show you some of the technology that we brought into that project that gives us efficiency gains. That's a wrap-up of the activities around the nation, and I just want to go to a couple of key drivers in this sector of why it should continue. ECIs, we've been focusing on them a long time, and if you, I will always be mentioning them. I love them. It's a wonderful form of contracting for us. It's where we get paid to work through the solutions of the client to de-risk the project for ourselves. It's often complex in nature, but we are able to price and program the works as the design is maturing. So it's very good for us, very good form of contracting. BIM and digital technology. So we are pushing the boundaries of what's available out there at the moment in the marketplace for digital. We currently have the capability to design BIM in 3D, and we can link our architectural model to the fabrication model. And what that does for us is gives us bill of materials, which allows us to hone our price very effectively, and then we can move straight from that to fabrication either locally or globally. So it's a real good efficiency way of us getting through to right the way from tendering right into site commencement. And lastly, ageing infrastructure and poor quality construction. They're not going away. The Tier 1 builders are constantly running in a time and cost model, which means that the major maintenance is occurring a lot more frequently. And ageing infrastructure, there's always something falling off a building, and we're there to help them out when that happens. And so the infrastructure that Australia has, it's going to continue to keep requiring maintenance spend. So that's a quick wrap up there of the building facade sector. Thanks very much. And Tristan, I think you're moving on to mining.
Thanks, Greg, and good afternoon, everyone. I'm Tristan Rees. I am the Chief Operations Officer for Duratec. I'm also a member of the executive team, board member for DDR, and a board member for the newly acquired EIG business. Prior to this role, I was the National Defence Manager for Duratec, and I'm sure I'll get peppered all about that later on today. So, to start off, we'll talk about mining industrial. It was a relatively flat first half, to be fair. The primary driver for this was delays in our major project awards. Good groundswell with our small to medium projects. However, one of our key clients in particular, Rio, has bunched up their sustaining capital works into a large portfolio with the intention to let that out as large geographical hubs as opposed to what has traditionally been purchase orders, small MSAs, etc. So that's taken the best part of 12 months. And it's working its way through now into awards. We are hopeful to get on the end of that over the coming months. We're quite hopeful to score one of those, and we'll hear back on those tenders shortly. We have had some great traction with BHP over the half. Our portfolio is now diversified into now port maintenance revenue streams alongside our engineering and AIMS contracts that we have for BHP. We've secured multiple projects with Port Engineering, and our long-term relationship continues in that space, heading towards MSA-type contractor agreements, which we're in discussions with BHP about how we clump all the works we're doing together with them and deliver that with them in the northwest. Our long-term relationship with Newmont continues to thrive, and we've ramped up with our works out at Boddington and other sites, and we've been requested to add our additional trades to these clients as well. So we've got moving from traditional blast paint remediation and starting to tack on structural repairs, access systems, etc. So it just opens a bigger slice of the pie for us, but also puts us in more of a turnkey position. And working with our subsidiaries, we see that continuing into the future. Still out at Tom Price, we've got a good package of work out there, and there's more opportunities out at that mining hub as well. From an outlook perspective, I talked to that future growth with BHP. We're seeing that shift into longer-term MSA agreements, which will allow to service multiple assets in particular. We've diversified our Hancock and FMG portfolios based on strong relationships, consistent performance with these clients. So we are doing really good work with Hancock and FMG, traditionally inland with Hancock, now into the ports infrastructure. And with FMG, we've worked more on their purchase order, project maintenance type of side, and we're starting to get some good exposure with them back into sort of MSA type of works as we go. We've also established a major projects division to target secure high value, longer term MSA contracts with the major miners including investment in talent and acquisition. So we've got a number of key hires that we've made over the last 6 months to really generate and target those larger scale MSA contracts, including the works with Rio Tinto. So that's a differentiator from our local based general operations teams in Port Hedland, Karratha and the Goldfields, which are targeting more of the exchanging purchase order type work that comes from routine maintenance and call outs and those sorts of things. So we think that coupled with major projects provides a really good outlook for mining. In New South Wales, we've completed an acquisition of Hunter Coatings just up in the Hunter region north of here. This comes with several long-term MSA contracts with major coal clients in the Hunter region and in Queensland for that matter. This acquisition demonstrates our commitment to growing and expanding mining and industrial offering nationally and internationally. So not just focused on the West. We do have a sector lead and a team of people driving that sector all around Australia and leveraging our existing footprints that we have. We've also recently established a footprint in Gladstone, and we'll be targeting offshore industrial clients, onshore I should say, industrial clients with our typical remedial services. We've done this again through talent acquisition and bringing across key client and managerial and local relationships to complement our existing self-perform capabilities. So to date in Gladstone, it's been transactional project here and there, not really a local footprint. We're now completely invested in that location. We expect to see outcomes of that in the near future. There's also a further push in hard rock mining in Queensland, and this will benefit from those existing Hunter Coating MSAs and relationships assisting us drive growth in that sector. So the outlook for mining in general is fairly strong. Thank you. For defence, revenue in the first half was fairly comparable to PCP at 82.2 million. However, there's been a significant increase in our gross margins, up from a relatively good base. This is best explained with a high contribution of business as usual type work. So the flatness is demonstrating our continued ability to secure those smaller to medium-sized projects which do come with a healthy gross margin, and less impacted by major projects which come at a slightly reduced margin for the scale and efficiency that comes with that. At HMS Stirling, we commenced long lead procurement activities and also early works for the marine infrastructure contract to ensure program outcomes are achieved for our client. Very tight timeframe project as we work through continual engagement and models to try and advance that work. And we'll talk to those opportunities later. We also became the first construction company in Australia to achieve ISO 19443 accreditation for the provision of services in the nuclear sector. This is a significant milestone and differentiator for Duratec. And this accreditation took the best part of 2 years to achieve, and that's without a backlog and a bottleneck in the process. So we see that duration taking longer for others to try and achieve that accreditation, and is a significant investment in time and resources to get that over the line. This ties in perfectly with the licensed facilities that Duratec looked to transition into under the ECI HC contracts at HMS Stirling, and provides a significant ongoing point of difference in the market for our specialist construction activities, not only in WA but also nationally. We did reach final completion on the RAF Tyndall project, which was Australia's Defence Force's first large-scale cut-to-cover aviation refuelling facility, which is there to support increasing fleet and aircraft in the northern Australian bases. Duratec has also submitted their tender for the RAF Learmonth cut-to-cover aviation refuelling facility, which will be Australia's second cut-to-cover large-scale fuelling facility, which provides an opportunity to bring our experienced team across from NT to the northwest of WA, assuming they can get all that cyclone rubble out of the way and we can get stuck into it, which is a tragedy, to be honest, but ultimately there is a big investment up in those bases, and that does need to happen. The anticipated award of that will be in the next couple of months, so we'll know where we stand on that project imminently. We've also expanded our defence offering into sustainment activities, so that's a really exciting area for us. The majority, if not all, of our work has been on estate. Sustainment, as we categorise it, is working on the assets themselves. So that can be the ships and the submarines, but also can be inland assets such as the dry dock that some some of you would know about down at Garden Island here in New South Wales. Raytheon's high-frequency antenna arrays in northern West Australia. Those are sustainment projects. And so we've had some runs on the board there as well, which is really exciting for us because that opens up a terrific additional total addressable market that has been very hard for us to penetrate. So projects have been awarded in New South Wales and NT in sustainment in the period. Right. From an outlook, defence sector is one of significant growth opportunities in the fourth quarter and into 27-28. This comes as Duratec seeks to maintain their business as usual works whilst moving into delivery phase on those multiple large-scale contracts. So the sweet spot is ahead of us there, a good groundswell of high-margin renewable type work with major projects. Many of those have been tendered and awaiting a decision. We also expect that relative margin stability as those larger scale projects, which Greg alluded to when he was talking about ECIs, are tendered under an ECI model which allows us and the clients to control the risk a lot more closely, leading to what we've found historically better results in profitability. Defence continues to spend their spend on Navy, Air Force and Northern bases, which aligns strategically with our defence offering, which is exactly that. Navy, Air Force with fuel, Navy Marine, Northern bases with our remote offices in Port Hedland, Karratha, Darwin and Queensland and Townsville. For Navy, there are significant opportunities associated with staged delivery of sovereign nuclear submarine capability in Australia, with billions of dollars of investment across Australia's naval bases. $8 billion is committed to HMAS Sterling in WA, and this is the first tranche of investment to accommodate submarine rotational forces from the United Kingdom and US, where they will deploy their Astute class and Virginia class nuclear submarines to this base, where Australia will gain operations and maintenance training on these vessels. So the stages of the nuclear program, submarine program, is to have the vessels, someone else's vessels park in Australia. Next stage is to procure someone else's submarines, in this case the US. Third stage is to have our own built in Australia. So well and truly into the first stage of that ongoing program of work, and all of that will be, nuclear licence facilities. Right. Duratec's joint venture, Urtec, DEJV, are engaged on both the marine and landside facilities through their existing ECI contracts, which equates to an initial opportunity of circa $600 million for the DJV in the successful delivery phase of these contracts. So that's 2 out of the 3 major programs tied up on the base at the moment. We are tendering and delivering the ECI phases for that, with hopeful to transition into delivery phase. The second tranche of investments that Sterling will cater for the purchase of Virginia-class submarines. In order to facilitate a permanent presence on site, significant additional investment will be required to either extend existing marine facilities or construct new facilities, with either approach providing great opportunity for us. So this will be coupled with additional licensed facilities for deep maintenance, which will ultimately require ISO 19443 accreditation. So there's another $25 billion committed across the road, $8 billion at HMAS Sterling, all tied up in this program of works. So talking to Henderson, which will be a ship and submarine sustainment facility, together with the $8 billion provides us a 10-year runway plus of significant work down there. We're in a perfect position to deliver that. The spend will be managed largely by Department of Defence. We'll have the same barriers of entry as other defence works do, limiting the field and providing opportunities for us. So be it direct, be it within the consortium, be it as a subcontractor and supplier, there's opportunities at all levels throughout that spend. Outside of WA, still on Navy. Outside of WA, Osborne Naval Shipyard in South Australia has also secured another $3.9 billion of funding to a total expected spend of $30 billion, providing significant opportunities for licensed facilities, marine infrastructure, etc. down there. We've been delivering defence projects in South Australia for the last 7 years, and with MEND already engaged doing upfront durability analysis with some of the key designers on the assets, we'll feel pretty confident that we'll be able to swing ourselves into some of those works as well. We're also forecasting significant investment in NT So back on HMAS Coonawarra, where we're just finishing off, there is another spend to be put up in that area to support, I guess, Northern Force posture and also Northern Queensland. So again, the approach Navy, Air Force, Northern bases is where it sits, and we're fortunately positioned really well for that. Yep, I'll just skip on. Yeah, there we go. The Australian Air Force is an ongoing investment, as we've spoken about, in particular liquid fuel storage and specialised training facilities. So the RAF Learmonth Fuel Facility, as mentioned earlier, is one of our high probability opportunities in that space, approximately 160 mil, and forecast for award in the next couple of months. The National Defence Fuels Transformation Program is another one we're tracking closely. There's multiple opportunities similar to Learmonth around Australia, particularly in the eastern seaboard. We've been shortlisted for all of those projects. It's a topical point for discussion with the relevant geopolitical climate. Defence has already identified the need for increased storage. I'm sure there's a significant question being raised right now about civilian infrastructure to support increased storage and capacity, which Nigel will cover off in the energy sector. Although the Australian Army has seen reduced investment, there is significant investment in long-range missiles and ammunition storage, as existing storage capacity is seen as inadequate for sustained warfare. These scopes align well with Duratec's specialised construction capabilities and defence footprint, so we are hopeful to see works come through from that spend. And sustainment, which I spoke to earlier, completely different spend for us, makes up the biggest slice of the 60 billion that's available to us now as in the total addressable market. We've successfully diversified into that now, and we'll put a concerted effort into growing that sector in our defence spend. Business as usual estate works portfolio, so that's that's first half largely. That's what that was. Is likely to see an increase in activity with a new client contractor panel being stood up. So that occurred over the course of the last 6 months with the transition of client representatives, and they're now rolling into delivery phase. This spend will continue to support business as usual revenues for the defence sector and provide us that solid platform to capitalise on major project spends across Australia, which brings us to our outlook. With BAU maintaining and underpinning high gross margin revenues and multiple high-value specialised projects likely to be secured in the next couple of months, it sets the scene for a solid fourth quarter and strong work into 27 and 28. With significant investment in future and further diversification, our defence business goes from strength to strength. I'll now invite Nigel Christopher to come up and talk about our energy sector. Thanks all.
Thanks, Tristan. For those of you who don't know me, my name is Nigel Kroonstuyver. I'm the National Energy Manager for Duratec. I wear a few other hats, including being part of the Duratec executive team, Managing Director for the WPF subsidiary. I'm on the board for the EIG subsidiary, and recently taken the role of Integration Manager for the Duratec Group. I've been with Duratec since inception in 2010. I've spent most of my time in the mining sector until about 2023 when I moved into the energy portfolio. Little bit on the first half FY26 for energy. This was already shared information, but just $27.3 million revenue is a little bit softer than expected, mostly due to timing of awards. Positives out of that, we have the acquisition of EIG in that time and establishing the DXP and expanding WPF into Queensland. I'll speak to some of these other projects as we go through, but some awards as well. A bit of an overview on the oil and gas part of energy. So about 2 to 3 years ago, Duratec had little to nothing in this space. So now we're widely spread across many of the major producers in this space. Our intent is to continue with an approach delivering projects in the specialist engineering SMP field, so that's with WPF, EIG, and in larger scale annuity contracts similar to Duratec's approach to the mining sector and what we've seen there. The addition of the EIG business and the establishment of DXP has seen an injection of in-house expertise to help strengthen our approach to this. You see there, Woodside, so the relationship is strong with Woodside on the back of the KBSB fender refurbishment works, which is now completed. We have started working with Woodside on early stage tendering for the tug pen finger works. It was on the same asset. We're also offshore with Woodside at the moment on the Goodwin platform. We're also doing some works with Woodside on the Scarborough FPU hookup. Santos, it's one of our biggest clients, continues to be, and our most regular client in this space. So at the moment, we continue the B-Tank works, which you saw as an award earlier in the year. That'll continue throughout 2026, similar to Exmouth, like it's still standing. We've recently tendered the National Safe Access and Fabric Maintenance MSAs, together with the Electrical and Instrumentation and Mechanical Works MSA for Santos, which is their WA and NT assets, which include Varanus Island, which we're already working on. The Harriet Alford decommissioning project was completed in the last couple of weeks as well. Overall, WPF played a critical role in this project that lasted for about 18 months and achieved about $20 million worth of revenue. This included plugging and abandonment, the make safe, the de-weighting and eventual deconstruction of this project. So the success of this project is a testament to the hard-working WPF team involved, and you'll see General Manager Mitch Wilson at the back there today. We're now planning for the next phase of Santos Northwest Shelf decommissioning works. We're looking forward to continuing in this decommissioning space and the experience that we've gained with this first project. For INPEX, on the back of the WPF workshop in Darwin, we've started to gain a regular presence on their Darwin LNG facility for maintenance and repair works, and we've recently been awarded the spool fabrication works for the Phase 3 project. This is their CCS and AGRU project, so we're excited to be attached to that project directly with INPEX. Vermilion Oil and Gas, that continues to be our MSA for safe access on their Wandoo platforms. It's a relationship that's been in place for over 5 years and continues to be strong. I won't go into every little bit of detail here for each of these clients, but it's highlighting that we're interacting with all the major producers at the moment, something that we weren't in 2 to 3 years ago, and really building in this space. APA, Chevron, Shell, Epic Energy. We've got some exciting awards that have come out of Mitsui's Waitsia project in the Perth Basin, so attachment contracts with all these clients is really good. Bit more on the fuel outlook for Duratec. So on the back on the back of some successful works with defence and harnessing opportunities, like Western Sydney Airport, Duratec are now positioned as one of the leaders when it comes to critical fuel assets in Australia. We've been growing our in-house expertise, and this is important for this space. So on top of Duratec's already strong team, we've significantly boosted our skills with EIG, and Daniel's here today as well. We've appointed a national fuel manager in Newton Van Dam who comes with over 20 years' experience in delivering complex fuel and energy projects as well. A bit on the Perth Airport. So you may be aware Perth Airport's got a $5 billion upgrade and which has begun already. Part of these works is a large fuel upgrade. We've tendered for the ECI, which takes us up to about 40% of the design, which is now at zero at the moment. During this ECI, if we're successful, we'll be able to price and program the works. This is a joint venture with West Coast Civil, who are an 18-year incumbent for the Perth Airport as well. Outside of this, there's plenty going on, upcoming projects in the fuel space. Kimberley Marine Support Base and Onslow Marine Support Base, we've completed fuel and electrical projects there and still going at the moment in the northwest of WA. The Learmonth Hydrant Line, which is the early works for some of the works Tristan was talking about before at RAAF Learmonth. Other works, including works with Rio Tinto, Sydney Airport, tendering with Adelaide Airport as well. So there's lots happening in this space at the moment. We've also been awarded a national service agreement with Quantum, servicing tanks and fixed assets across their various locations around Australia. So another master service agreement there. Other energy, so we're excited. You would have seen the announcement last couple of days on the PNG Newmont Award in Lihir. So I'll let Bill Easton talk to the details from DXP, talk to the details on this one. But we are looking forward to the opportunities that this can bring to the energy space for Duratec. PNG has been a target area since establishing the PNG entity back in 2024. We know this area is a long life, capital intensive energy market. This opportunity has allowed us to establish our sourcing model and provides us access to what is a market with high barriers to entry. Also there you see the Orica Hunter Valley Hydrogen Hub. So the project is still awaiting FID, but we know it's had over $500 million worth of funding that's been committed. So we see this as a likely project. Duratec has tendered for what is a managing contractor alongside, which is probably about $30 million worth of revenue in that if successful, alongside the designer Orica, alongside the designer and Orica, who will be the developer and the client for the works. We expect early works to start in about 2026 and construction through to about 2028. And just a little bit on some of the images from the Harriet Alpha decommissioning project. As you can see, topside's been removed in the second photo there. Like I said, 18 months worth of work, all stages, so there's heaps more to talk about with that decommissioning phase if you want to touch us at the back there. Now pass over to Tom and Phil, talk about DDR. Thanks.
Yeah, good afternoon everyone, and I'd like to introduce Tom Hutchison, who's going to present the last slide in this section. Majority owner of DDR and chairman of DDR. He's also owner of Dundee Rock and chairman of that company, and owner and chairman of Dundee Rock Services. In terms of myself, many of you will know me as MD of Duratec Limited up until end of 2023. Prior to that, I was CEO of Savcor Global up until leaving that company in 2010. Current role, non-executive director of Duratec Limited and DDR. In terms of performance of DDR, very solid performance in the first half, and that's despite the fact that some of the revenue that we expected in the second quarter has been pushed right to the third quarter. But good solid revenue and gross profit there. Also record work on hand of 95 million and quoted works of 200 mil across defence, renewables and infrastructure. Just recently we've successfully applied our strategic plan of extending RC construction into other states because it was WA based, and we've successfully secured works in South Australia and Northern Territory, which I'll talk about shortly. What's great about DDR is that since incorporation in 2017, we've focused very much on making this a fully sustainable standalone business, and we've succeeded in doing that, and we've got a very strong balance sheet as a consequence of that with zero debt. What Tom and I, when we got together in 2017, our vision was to establish a solid Aboriginal entity with strong focus on capability and delivering well in a market which was always a bit patchy. Our vision has been achieved in terms of establishing a recognised, highly respected Tier 1 Aboriginal head contracting company with also strong self-performance capability with the reinforced concrete construction entity that we acquired a bit over 2 years ago. The work in hand has increased since in recent times with awards with Estate Works and also with Northern Territory Shiplift project for RC construction, and that's installing reinforced concrete bases on large caissons. It's about a $10 million project. As well as that, RC Construction have secured a renewable energy project, which is foundations for wind turbine in South Australia. The RC Construction has certainly turned out to be a very successful acquisition, and importantly it enables us to provide meaningful work for Aboriginal and Torres Strait Islander peoples, which is very much our focus. The estate works at RAF Darwin and Robertson Barracks has had a team there for over 6 years, and that's testimony to the quality of work, the safe delivery of works, and the satisfaction of the Department of Defence in that estate works program. It's interesting to see, finally we're starting to see a bit more maturity from sophisticated clients in the Indigenous procurement policies. They're certainly maturing, and there's certainly a lot more recognition of engaging with companies like DDR, which is now clearly established in the top 5 of fully owned Aboriginal businesses. In terms of CapEx and further investment opportunities, we are supporting RC Construction very much, and we've recently had a board meeting last week in Darwin where we've approved expenditure on a large concrete pump which will increase profitability and also gives us the opportunity to provide personnel the skill sets to be able to operate and maintain that equipment. So overall, we certainly see the works for DDR going forward very positive. Obviously, there's been a lot of focus on defence, but we're endeavouring to diversify and extend to other clients, and we're having success, as I see, in that renewables area, health section, and basically infrastructure. So without, I'll pass on to the next slide, which shows the history of growth over the last 8 years, and the key drivers have been IPP with government and defence infrastructure, and we're seeing diversification in a lot of sectors now that value the IPP model. The blip in 2020 or FY23 there is With Defence and the state works, they turned the tap off. The management at the time did a remarkable job tightening down on overheads and getting us through that period remarkably well, whilst not getting into a loss situation. Key market sectors there you see are defence, government infrastructure, mining and industrial. So we're dealing very much with sophisticated clients that value the IPP model. I'll now pass over to Tom to talk about outcomes and engagement. Tom.
Thank you, Phil. On DDR, we're a leading Supply Nation registered business. We strive to achieve our achievements with the board. It's a very strong board. We look forward to supporting other businesses, which we help with 33% spend on Aboriginal businesses to follow the procurement policies. We have a 33% Indigenous employment, and 25% of that is in women's to the training and in services. But overall, DDR complies with all regulations by the government. We're a strong board on going forward, and the future looks very good. We support programs for Hoops for Health, Friends and Dignities, KS football programs, and supporting a lot of Aboriginal businesses to come into defence, and also for ourselves we're all providing a new training formula for the renewables and getting younger people into defence and into projects that RCs will be doing in the renewable energies. I do thank you for the opportunity and to speak on this, and thank you again. I'll pass it on to the slide here. Bill Easton, thank you.
Thank you, Tom and Phil. First of all, it's a pleasure to be here today. I'll just see if I can get this up. Yeah, that's good. I'll provide a brief overview on DXP, where we are today, and why this is strategically important to Duratec. By way of background, I've spent over 30 years across major projects, drilling and decommissioning. Most recently as the Vice President of Projects, overseeing a $30 billion circa portfolio for Santos, including the Barossa offshore development, as well as the Pikka development in Alaska. In addition to that, I oversee 1,500 approximate wells a year for Santos and drilling across the country and across those regions, as well as being in charge of their decommissioning portfolio. Prior to that, I held leadership roles at Oil Search, with a significant portion of my time spent in the Papua New Guinean basin. I'm now the Managing Director of DXP, as well as being part of the board. We're now building, what we're building with DXP now is very deliberate, and it's a genuine energy platform with Duratec. So what is DXP? DXP is a joint venture between Duratec, who are the major shareholders, as you can see there, and Proxima Energy, and that's where the D and the P come from in the title. Proxima was founded by Dr. Minnie Liu and myself, and Minnie Liu's in the crowd here. You'll get to meet Minnie a little bit later. And we believe that the partnership is highly complementary. Duratec brings its delivery capability, the scale, the systems, and the balance sheet, and we've seen a lot of that earlier today. And what we believe we bring to the joint venture is a deep oil and gas expertise in major project delivery, as well as established industry relationships. Together, that positions us really well to enter into the oil and gas sector in a more broader way than is currently done today. And we plan to operate across the full asset life cycle, as you can see is depicted below, all the way from developments, all the way through down to final decommissioning. Very importantly, we're not targeting a single niche element of any of those. We are positioned for long-term participation across the entire life cycle. What differentiates this model? We are structured from day one as an integrated delivery platform. This matters because what we're hearing from clients, and I can attest from that from being part of Santos, they are moving away, our clients are moving away from what I would say fragmented contracting models into fewer interfaces and ensuring that the contractors have got clear accountability. This is exactly where we want to position DXP. Our focus markets are going to be Australia, leveraging on the Duratec infrastructure across the country, Papua New Guinea, and I think Nigel talked about the recent award with Newmont, as well as then broadening out into the Asia Pacific region. Not sure why that's not going. Let's try that. See if you can get that to work. Oh, next slide. Yeah. Excellent support, Chris, on the IT. I really like that. In terms of performance and early results, the JV was only established as early as October 2025, so we've only been, essentially active for 6 months. Delivery to date, we've secured contracts in brownfield engineering, greenfield engineering, as well as decommissioning. And the standout, of course, was the recent announcement where we were awarded a 19-well abandonment project in PNG, which is valued at approximately $45 million. And we'll go into a little more detail on that on the subsequent slide. But what that does is it does validates our integrated delivery model very early in the relationship. So that was really pleasing to see that recognised by the award of that contract. And it demonstrates our ability to mobilise and execute in a complex jurisdiction such as PNG. And Nigel talked about the difficult barriers to entry, and we've managed to overcome that with this contract award. Of course, we got through a lot of people within Duratec. I think Nigel Sweeney would attest. We've got about 40 ex-oil search employees in the company with a deep, deep understanding of the PNG basin. So we take that to the table, and that's really helped give Newmont confidence that we can deliver this project from a standing start, which is excellent. This one talks in a little bit more detail on the award of that project here. This refers to the Lihir Nearshore Barrier Phase 1 of the project. It involves the decommissioning of geothermal wells. As we said before, it's approximately $45 million of revenue over a 12-month period. Mobilization is underway, with site activity commencing mid-May. Importantly, it's full in-country execution, supported by established PNG-based partners, as well as support logistically and so on and so forth. And a key differentiator was we combine our international technical capability with our in-country execution capability, and that's going to drive, I believe, better cost, schedule, and delivery outcomes for the client. And as I said before, it does reflect the strong client confidence, and particularly in the recognition of our PNG capability for such a big project such as this. And you can see the photographs of that's the one in the top right is the mine. And the whole idea of this project is to life extend and come down, mine about 200 meters down lower than they're mining today. And of course, the 19 wells are in the way. So the plan is to decommissioning those wells for a life extension of the mine. In terms of outlook and growth drivers and the pipeline and some of the momentum, we've got active joint bids, including an offshore WA project with one of our partners here, Adam Richardson. Maybe your hand up, Adam, is in the crowd somewhere. He's one of our partners from Condor Energy Services, and you can meet and talk to Adam after this. In parallel, again, in partnership with Condor, we're looking at a turnkey well abandonment model, and that's initially targeting the coal seam gas sector. But the scale of the amount of wells they're drilling every year in coal seam gas is quite phenomenal. They're drilling about 3,000 or 4,000 wells a year. So you can imagine there's literally tens of thousands of wells to be decommissioned. So, and again, the differentiation here is moving away from the day rate to disaggregated services towards integrated outcome-based delivery. This allows us to drive efficiency through repeatability, standardise equipment and processes, capture greater value per well, and we believe that's a gap in the market currently that exists today. So, in summary, DXP is already generating revenue, expanding Duratec's addressable market, and building a pipeline of follow-on opportunities and forming some key partnerships such as with Condor. In terms of some of the outlook and market drivers, the timing for DXP we believe is highly favourable. Across the region we're seeing three key structural drivers. The first one being continued development. So ongoing gas and energy project activity, particularly in PNG, but also in offshore Australia, we're seeing some continued development, and we believe those developments will continue because they're critical to support the energy security, as we're seeing some of that today, with what's going on in the Middle East and so forth, and this will continue, we believe, until during the energy transition. The second one is asset life extension. So operators are extending the life of their existing assets, increasing the demand for integrity services, engineering, brownfield construction, as well as intervention capability. And I think the facade business was talking about it there. I think there's going to be continued business, and in that, remediation, asset life extension sector in our oil and gas sector, in particular, for many, many years to come. And the third one is large-scale decommissioning, particularly offshore in WA, as well as down south in the Bass Strait. There's an estimated $45 billion of decommissioning liability offshore alone, and we are still very early stages in that life cycle. And particularly with our experience with Dr. Minnie Liu and myself with the UK North Sea sector, where we've been through this transition 20 years ago, Australia is now just coming into that same sector. And it's our belief is it's a high, and I would say it's the highest cost sector globally for decommissioning per unit. And so there's the opportunity in that space. We believe that we can set up, a model that can offer cost efficiency that the industry is crying out for, as well as some fit-for-purpose solutions. So why DXP is well positioned? Clients are increasingly seeking what we believe integrated solutions, reduce interface risk, end-to-end accountability, and we believe this joint venture can deliver that through engineering, execution and equipment supply, as well as a single integrated delivery model. In practical terms, fewer contractors, clear accountability, better cost and schedule outcomes. We are aligned where the market is moving from multi-contractor models to integrated delivery platforms. And importantly, PNG contract award recently gives us a strategic entry point into a high growth, high barrier to entry regional market. And sorry, I'm just finish off here. The strategic value to Duratec, DXP delivers clear, we believe, strategic value to Duratec, allows the expansion into the energy sector, full exposure across the energy asset life cycle, access to new markets and clients, particularly in oil and gas and LNG operators, and scalable growth for a growth platform, not necessarily project specific, but a repeatable model across the regions. In close, DXP is recently established, but we're already delivering. We have a strong proof point with the contract award recently with Duratec and PNG. And what differentiates DXP, it is built as an integrated delivery platform from day one, positioned to capture value across the full energy life cycle, and we see this as a scalable multi-year growth engine for Duratec. Thank you very much. And I think Liam from MEND is up next.
Thanks, Bill. For those of you who haven't met me, my name's Liam Holloway. I am Managing Director of Mend Consulting. So today we're at the end, we're dessert of this little, degustation of Duratec that we've had. But normally Mend, for those of you who don't know, we're like the appetizer or the amuse-bouche, if you like. We come in really early, so even before the ECI, we're the VECI. So a little bit about myself. Previously, I also worked at Savcor Limited in the past, where I was the National Technical Manager or Engineering Manager of that business, prior to founding Mend Consulting in 2014. I've also had some research background, so I had an adjunct role with Monash University, and nowadays still continue to be an industry advisor for, or industry partner or research partner with CSIRO with the Data 61 program at the moment. Still operating as Mend Managing Director, and I also part of the Duratec executive team, so working alongside the other members of the team that you met today. So how's Mend's performance been? So the last year has been a pretty eventful year for us. One of the highlights or crowning moments was making our first acquisition, which was RGK Resources, and you'll be able to meet Aaron, who's the Managing Director and founder of RGK Resources here this afternoon. He'll either be hanging around with me up the front here or down the back with one of the booths as well. So getting to talk to him, and that was one of the last missing pieces in our puzzle, and that was the NDT part of the business, so non-destructive testing of metal, and it's a very highly energy-focused part of the business. We also had a strategic objective to increase our visibility of defence work. We saw, Duratec was obviously very successful in the defence sector, but Mend wasn't so much so in that space. So we've really managed to secure some very early lead work, some that Tristan had alluded to, working with facilities across the country in the durability planning phase, as also the leaning on our strength, which is investigation and testing of infrastructure. So we've just completed a 5% design program with KBR, looking at infrastructure, marine infrastructure across the country, 5 main sites, which is a lead into maybe $400 to $600 million worth of remediation work in the next 5 to 6 years. We have delivered some significant ECI projects in the mining and resources sector, so even though they might slow or flatten some of their spending in the sustaining capital works, that often means that in our space they're increasing their spend in the early engineering and investigation phase, which really sits well with us. We just finished the $30 million project for Dampier Salt Limit. Oh, it wasn't $30 million for us, but it's a $30 million project, remediation project. We just finished the early stage planning, budgeting and scheduling for that, and investigation work, and I can show some models of that later at the demonstration hub. And we're currently in the throes of another 2 similar projects with Dampier Salt Limited for the Dampier operations. They recently sold their Lake McLeod operation, so they've got some money to spend on the sustainment of their existing infrastructure or remaining infrastructure. So very heavily involved there, as well as with clients like FMG, Hancock and other key mining clients across the western seaboard, and starting to push into the eastern seaboard as well. Critical to pushing into the eastern seaboard, we saw as one of our early entry points and points of difference is having an in-house laboratory. So we've just recently, we established it on the West Coast, and that's been very, very successful, but obviously the West Coast don't want to be seen to be sending samples, or the East Coast don't want to send samples to the West Coast. So we've put one over here, and lo and behold, now people start sending samples to our labs on the East Coast, which is really great. And that's a bit of a strategy to get more visibility on other projects. So we can't do all of the projects nationally in the testing and materials testing space. So what we're finding is a lot of our clients are now starting to send their samples, or competitors even are starting to send their samples to us for testing in the laboratory, because we have a special niche in that space. Another exciting project that we've successfully delivered and now going into phase 2 was the digital twin pilot for Rio Tinto Iron Ore. They do a lot of their own power generation, so gas turbine or aeroderivative gas turbines to generate power for their sites. And they approached us to come up with a solution, a digital twin solution for them. So we coupled our spatial knowledge with our asset management knowledge and software knowledge to present a range of projects or proposals to them. And now we're consulting into Rio Tinto to build up the pilot program for the first of their power generation plants. And then based on the success of that, roll out to another 4 power generation sites. So that's a basically a digital twin where we do all of our reality modelling and testing, but also put in IoT data, so measure the speed and the pressure and other things to get early visibility on critical infrastructure, and then gives you visibility on what type of shutdown planning and remediation works come off the back of that. Just recently, and we had a couple of our staff trapped on Barrow Island, which is pretty much where the eye of the cyclone moves straight over the top of it. We've started doing annual well casing cathodic protection monitoring for Chevron out on Barrow Island. So Barrow Island's, one of the large gas processing facilities for Chevron on the western seaboard, and it also has some old legacy WA oil assets out there. So they protect both their carbon sequestration wells and some of their extraction wells with cathodic protection on land, which is not typical, but we've got key capability in that cathodic protection space, which is another entry point for us into the energy sector as MEND, and we're getting out there early and getting relationships with Chevron on that island now. And it's been, I guess, through the acquisition and through our organic growth, we've nearly doubled in size. We're probably on the cusp of doubling in size in the last 12 months, so that's really exciting. We now have a team of, I think, 15 or 16 people on the eastern seaboard, which is really starting to ramp up and at the tipping point where it'll become a great business over here for us as well in MEND. So what's coming in the future? We just kicked off the Story Bridge there on the right. Some of you, anyone from Brisbane may know it, but it's basically their version of the Sydney Harbour Bridge. Don't tell them that it's not as impressive, but it's pretty cool. But it's owned by the local council, but the federal government needs to chip in some money. They spent $120 million trying to refurbish and maintain it over the last decade, but it's touted as needing another $350 million north for the restoration of that bridge, which is pretty much on par with similar bridges around the world. The federal government's chipped in, and they're doing a business case at the moment. So Arup Engineering are doing a business case, and MEND, being the dirty engineers, as I like to call us, we go in and we do the testing and the hard work on the actual asset and understand the actual asset so that they can make their business case. So in the next couple of weeks, there's a couple of shutdowns, and we'll be out there taking samples and sending those samples to the laboratory. And getting that very early contractor visibility on what will be a massive restoration project over the next decade. We've signed a master services agreement with Mott MacDonald. Mott MacDonald are now one of the PDS or Project Delivery Services contractors for Department of Defence. They don't go out and do their own dirty engineering, so we will be out there collecting data and information about the assets so that they can formulate and develop project scopes for the base services transformation program for the Department of Defence. So once again, getting good early look ahead for the Duratec businesses. So we've also still continuing, and I'll show where we're at with the infrastructure digitisation strategy, staying on the head of the curve, implementing the newest technology, investing in research so that we can make sure that we're not getting sort of gobbled up by other people trying to, imitate us or emulate us. We're still seeing a lot of good uptake from the laboratory services, and like I said, being on the East Coast, we're starting to see that really paying dividends. The pipeline cathodic protection industry, we're starting now to price, design, supply, commissioning projects increasingly into the energy sector, and we're starting to get inquiries now from PNG and from Southeast Asia for design work on pipeline cathodic protection. So it's just visibility and also opportunities for WPF and other parts of our business when we know what's getting built when, because it's typically, at about 5% design, they want to start knowing how much it's going to cost them to do cathodic protection as well. And lastly but not least, MEND's NDT services, or RGK. They've got a great business model working in the energy sector on the west coast. They've got an ongoing contract with the BP facility in Kwinana. We're looking to expand, and I was just up in Gladstone looking at the opportunities up there, so we'll use that business, part of our business, as a spearhead into Gladstone to support Duratec, as well as our other entities growing into that one. And it wouldn't be a MEND, amuse-bouche without a little bit of innovation, a little bit of what's future. We're still, investing in technology as an accelerator for our business. It's really shifting now to the NDT focus. Robotics is a very hot topic, and a lot of grants and applications that we look at with universities are around robotics and taking people out of harm's way. be those ground ones or crawling robots or the other type, the flying ones. The next big thing, we're working on a partnership with several universities at the moment, but also that's linked with Woodside and Rolls-Royce Nuclear and Amentum. So it's a very early partnership in the materials and durability and all those things related to that type of technology, but by collaborating with those types of entities, we'll be able to position ourselves to have the capability and knowledge to push into what will become, you know, a nuclear industry in Australia in the future. And the main point of difference that we're continuing to use is the integration of computer vision into our reality models. So we've had PhDs now related to MEND nearly since inception, so about 11 years of PhDs continuously working on that space. We're not developing AI algorithms, we're not writing them ourselves, they do dabble in it. But what we do have is a clear team who are dedicated there looking at it and understanding what's, you know, at the cutting edge and the ways to do it at the moment. And I'll show you later at the hub, we're collecting mammoth amounts of data about our assets through reality modelling and using the digital workflow. And the PhD students are developing models that are going to be able to grab that knowledge and then translate it into basically real-time decision-making tools when you go out and take photos. So computer vision, so basically seeing something and understanding what to do with it. Next, so that's a little snapshot and a brief, hopefully 5-minute update on where MEND's at and where we're going. And I think now I'd just like to hand back to Chris to wrap. Thank you.
Thanks, Liam. I'm glad you're here too, because every time somebody asks me what MEND does, I don't know if I summarise it as well as you did, so thank you for that. What we're going to do now is we're just going to go through the outlook and then into a quick summary of business and where we sit. Then we'll do we'll have a 5-minute break and then we'll come back straight for the Q&A. So what we have up here, and we've heard from every of the business units, but we can see our tenders are still sitting there at 1.8 billion. We have 5 major projects sitting there that have a value of over 500 million that are due for award over the next couple of months. So our order book's still strong. That's holding up quite well. Obviously, we're winning our small to medium projects, so we're looking for that conversion pretty soon. So that's what we're looking at. So we have sort of grown our revenue over the years without those bigger projects. So when we blend them in, we think we're going to be in a really good space. So that's just a bit about the order book, and it's been sitting like that for some time, but we do feel we are right on the cusp of some of those major projects to be won. So looking at the short-term outlook, so we're holding a pretty good order book. We think that'll grow. We've got all our MSA work that's coming through, and what we want to do is blend that up towards the end of, or perhaps in the fourth quarter, which we're about to start, inside there. So that'll get our run rate pretty well for the end of the FY26 and also into the start of 27. So that's us in a short-term focus. So if we do and when we land some of the bigger projects, that's going to really support that medium-term outlook as well. We see our ECI run rate going exceptionally well. This is the procurement method that our clients want to see, and we're obviously the uptake on that is good. It supports a good margin, a safe outcome, and a real good quality. So the other thing that we'll note here in that medium long term is the places in which we operate. This is the sectors and the areas. And if we have a look at that, and we can see, and we've probably picked that up here today already, but we're on Garden Island. There is big spends there. There's Henderson. We have fuel upgrades and new fuel facilities to be built, and that's obviously had a sort of a spotlight shone on it fairly recently as well. We have all the decommissioning we just looked at, and there's just the general maintenance of all the structures in mining, energy and infrastructure assets that are there. So we have absolute good drivers behind us. The other part I would mention here too is the Pacific area that we have recently won the $45 million project for. And that just gives us a great launching pad and an opportunity to grow into that area. So really, in summary, we're really well positioned for this future growth. We have a good banking facility. We've got good, strong cash balances. The areas and sectors we are in provide a pretty good gross margin, and we've seen that increase a little bit. And really, we genuinely believe that our future has never been brighter, and we are absolutely looking forward to deliver on that. So that's it as a wrap. If you have a 5-minute break, and then if you can come back and we'll set up for the Q&A session. Thank you.
Thank you. That's great. Yeah, thanks everyone. Yeah, really appreciate your time today. It's fantastic to be able to come and engage with us. We're really enjoying it. Hope we are too. This is your chance now to have a bit of a Q&A with our panel here, who, and I think I have to lean down like that a bit. Ashley Muirhead, our CFO, Chris Oates, Managing Director, Tristan Rees, COO, and Nigel Kroonstuyver, the one with many hats. So yeah, bring a bit of energy, have a few questions, it'll be great. Let's make it interactive. That's the panel. There is Slido, so for any of you who did manage to catch the slido.com, you can log in with the Duratec password and you can ask questions that way, but we also do have 2 roving mics, so just stick your hand up and Callum or Maeve will come round with the microphone and you can call out a question that way or raise your hand and yell out loud. So whilst you digest that, I'll throw a quick couple of questions. There has been 1 or 2 questions that have come through already. Out to the panel while you have a think about some others. Chris, this is your first investor presentation since 2021, and why now?
We've had another one, I think, in 23. That was here. So we've done a couple of them. Yeah, so every 2 years we're trying to do that. So, and then just gives us a deep dive into the business and something like this. So I think that we will try and do that again and look to those new technologies and the new things we're doing. So it's a great opportunity to get interactive and see the depth of the team. So we look to do them every 2 years. We might have been a couple of months behind or something like that, but that's the idea of it. And you know, sometimes the AGMs now aren't as interactive as they have been. So this is what we think is a really good forum to do it a little bit better than just an AGM. So we'll continue to do them.
Great, thank you. I've got a couple of other queries here. Tristan, sector gross margins are up, particularly defence. Do you see this continuing?
Yeah, it's a good question, if you can hear me.
Yes.
Yeah, so, I mean, we spoke about that in the separate sectors a little bit. You know, the business as usual revenue tends to be higher gross margin. So as we continue to deliver those smaller, medium-sized projects, which we will, outside of targeting majors, we should be able to see sustained gross margin for those sorts of work. And then when we bring the major projects on, you know, where they are, the ECI model is fairly low risk, and we should be able to actually see an increase in the gross margins on majors, which has traditionally been a little bit lower. So yeah, it is good gross margin. That's a contribution of the smaller mediums. But going forward, we think it is sustainable to an extent. You know, if it's a $1 billion contract, obviously we'd likely see a sliding decrease in gross margin for that. But where the ECI model's up front, we're able to manage that risk. That allows us to continue with that, you know, high profitability.
Okay, here we go. Yes, please.
Hi there. I just had a quick question for Tristan. Just the accreditation, the ISO 19443. Just what does that allow you to do going forward that you've not been able to do previously? I guess just trying to understand the significance of the investment in time and costs that you put into that.
Yeah, so it's an emerging industry. So that accreditation has been there for a while, but there had not been a regulator in Australia managing, you know, the construction and management and ongoing operations of nuclear licensed facilities. So the works that we are working on the ECI contract on down at Garden Island, which is one of the 2 contracts, one of those, both of them actually are licensed facilities, so they need to comply or be built in, right from the start, designed, built, constructed and managed in accordance with ISO 19443. So first project of its kind for Australia, although very similar to the sort of works we do all the time. Doesn't need that accreditation mandatory right now, but will likely be mandated in near term. And then what that means is anything else with a licence edge to it, so anything at Henderson that's got a nuclear submarine pulled alongside, or any electrical services that service that submarine are called important to nuclear safety and therefore have to be licensed. So when I say important nuclear safety, anything along the supply chain, design, constructions, power supplies or anything has a potential to have an impact to the safe management of a reactor becomes important nuclear safety. So yeah, so that's the market, and the waiting list is, well, we figure at least a couple of years to get credited for that. Now, if you haven't started, then that's what you're looking at.
There was a question behind as well. Yes, please. Thanks, Gavin.
So Tristan, just on, you mentioned sustaining works in defence, which is sort of newish as an idea. And you also mentioned that it's a big part of their $60 billion sort of overall budgets. What do you need to add skill-wise, if anything, to sort of take on that opportunity to the best of your advantage? And how do we think about that in 3 years? Is that 100, 200, 300? Who knows? Maybe unpack that a bit.
Yeah, so the skill set we need is actually what we do everywhere else in the business except for defence, which is maintenance, remedial work, so blast paint, concrete remediation, bit of structural steel welding, EIG business with mechanical fitting and turning, and WPF with spooling. So it is it's a harder. Well, I wouldn't say harder, but we've focused our energy on the estate, and that's where we've had our success. That's through a different branch of defence. Tends to get tied up with primes, and when I say primes, like $20 billion companies, international primes tend to win the major maintenance contract for, say, blasting, painting a submarine. It'll be a Thales, or it'll be a BAE Systems, or a Raytheon, or someone like that. And it was the key to get into that is to try and work in under those relationships to secure work in their supply chain, so they won't do the work. They'll just take on the contract management. The tender itself would be millions of dollars just to even bid for it for some of those contracts. So we've sort of have targeted that strategically over time, and finally sort of got a few runs on the board. Does that answer your question, Gav?
Sure, just telling
So, it's a big place to play in too. And if we further our acquisition profile, that may come under that look as well, to see if that's a way to grow it. But we're certainly not lost on us what it can do for the business. So it's not, we're familiar with it and what they do. So, and we've had a few little inroads into a couple of little smaller projects, here as well. So we'll be looking forward to growing that part of the business.
I've got a couple of questions here too still, so please keep thinking of them, keep throwing them at us. But Ashley, can you provide some commentary on banking facilities to support growth and project delivery?
Yeah, sure, no problem. With regards to our banking and bond facilities, we actually increased them last year, which puts us in a great position for the future growth, because we've actually got strong headroom on all our facilities at the moment. We do continue to monitor our facilities all the time along with forecasts, and we would be in position to speak to our banking and bond providers if we needed to change that, but we're in a really good spot at the moment.
Thank you. Any others? I'll keep going. Chris, what is Duratec's acquisition strategy?
Yeah, so we sit inside. We've got a good slide on that we use. It wasn't in today's pack, but it's got the dash lines around where we think we can expand. And so we've got, we like the sectors we're in. We're not really thinking about jumping out. You see a lot of people chase, high level, the BESS industries or the electrical rewiring the nation. That's not really our scene. We want to stay with the ones we're in. Geographically, yes, there's an interest in expanding a bit. I still look at the East Coast, with 80% of the population. It's certainly not like that for us for the revenue split. So we think East Coast we can grow a lot more. So that's probably going to catch our attention. There's multiple opportunities come at us all the time. And just within the business, we've stood up a bit of a team there that are really engaging in that, and we're looking at how that can impact us. So we're certainly got a stronger eye on it, but also you look at our organic potential right now is phenomenal. So we're making sure we don't sort of drift off on our focus, but really there are certainly a few other acquisitions that are very interesting, and we'll just let them play out and see how we go.
Thank you. There's a question coming on Slido. I'll put it out to the panel, but the number of competitors tendering for Learmonth plus fuel storage work, and what your point of difference is.
Probably you.
Yeah, sure. Yeah, no worries. I mean, Learmonth, we're one or two now. It's been shortlisted down. So So the decision, the next stage will be the award to the successful party. We're very confident on that project, and the reason we're confident on fuel storage as a whole is it's not a well-serviced industry at all. So we're finding ourselves over the many years we've been doing it, turning up and competing against different companies each time. There doesn't seem to be a continuous peer in that market, and not only that, and for that reason, it's a type of the type of projects in fuel. The client needs a lot of confidence in the end result. There's examples out there of really poorly executed projects that have hurt the clients very badly. Like, for example, Adelaide Airport went without a reliable fuel system for over a year there because you've got a head contractor turning up for their first hurrah in fuel and learning a very hard lesson on that. So we've invested heavily in that over the years and done significantly more than most projects all around Australia. We've invested with EIG, which Nigel can cover off what that means, but that, Dan's in the audience, and I definitely recommend you have a chat with him today about, they're absolutely cornered the market in Western Australia. There is literally no one that's competing against them.
Yeah, I was going to say it's a technical skill set that's probably been overlooked, I think, in the industry where, there might be constructors that have come along, but the technical skill set that comes along with it, and that's something we've really witnessed with EIG and some of the expertise within our business. It looks like it's been overlooked a little bit as to the intricacy of the technical skill set that comes with fuel, and I think that's where we are now focusing our efforts to make sure that we build the in-house technical skill set so it doesn't get lost on us.
That's excellent. And Tristan's offer and Nigel support it. Dan Johnson will be at the back of the room. He loves a chat, so certainly get a hold of him and ask him about fuel, and prepared to be there for a while.
Yeah, it's funny whenever we hear that, people go, tanks. And just by example, what's a tank in some of the projects we do, percentage-wise of the whole job?
It'd be 10 to 15%.
Yeah, which surprises some, but that meaning that there's a hell of a lot more to fuel than just the tank side of it. So that I think that's the bit that Nigel's probably talking to there, of the smarts and all the know-how that we're adapting to and learning that can catch people out.
Yeah, and to that, there's a couple of other listed stocks that you'd be aware of in industrial with Saunders and Brockman trading under VBX, I think it is, or something like that. So they're coming to us to partner on these facilities they need a head contractor peer to deliver that. So we're not finding ourselves competing against the tank builders, we're finding ourselves competing against whoever turns up on the day for that sort of facility.
There's a question all the way from New York. A lot of you in the room are long-term supporters, and also so is John from Sahora Peak Capital, who's asked this question. It seems clear Duratec is on the cusp of a step change in revenues and profits. Without getting too ahead, where does the panel envision Duratec in 5 to 10 years?
How far ahead?
5 to 10. We do some good planning. It's pretty exciting, the opportunities. And just before, I want to thank John for he's flown all the way to New York for this event, and so that's been really good and appreciated. But when we do look ahead, they in each of the sectors, so we'll break that down. It's extremely positive in each one of them, and we've positioned the business. And just talking to somebody in the audience just then about how did you do that, like decommissioning even. You do have these opportunities to see through. It's not foreign to us, it's in our area. So we have a look at that and we build teams to get there. So if we jump into each of those sectors, the runway is phenomenal. We have great people employed, so we have great state managers that operate within the state. We have the sector leads that couple on top of that are driven and have a very good long-term vision. So where we obviously there's no numbers thrown around, but it's just very positive within each of the sectors, and when you add it all up, it does look very good. And it's just, I think, is why we attract good people too, because we have this passion and vision and passion to do this. And so I think it will be going really well. And hopefully, right now we can see those step changes ahead of us, which aren't too far away. We think of those major projects. If we can win our share of them and lay the foundation, then we'll be off.
Yes, please.
You
got me. Hello. I think, Chris, you mentioned earlier in your tenders there's 5 projects worth 500 million revenue.
Yeah.
Should they all hit at once? Do you have the resources to service them immediately? And if not, how quickly can you bring them on?
Yeah, each one of them, in short, we think we're totally capable of doing it. And the reason why is because a lot of them are ECI, right? So you actually get paid to build your team of people. And so particularly the defence one, so if just quickly on the 2 ECIs for defence, we're getting paid to do that. So the instruction is to build your team, hold your team, and that's the team that delivers the project. So you've got everyone there, you've engaged with the market, so we've got the entire sort of supply chain ready to go. Learmonth is a replica of the Tyndall tanks, and so we can bring that team together. So, you know, and the people that sort of from the preliminary side or our people are going to be the same people coming in. So that's a couple of them, I think.
Yeah, Shiplift up in Northern Territory, which RCs have already been awarded their component ahead of hopefully Duratec's success on that project. That team from HMS Coonawarra that's just ramping down now, we actually need that work to backfill those roles. So if you look at it, you know, you've got Northern Territories, although they work under our systems and processes and collectively as a group is still a separate team delivering a portfolio, so they're not going to get impacted by what we do in WA at all. In fact, they're just planning out their forward works there. And I think the one we talked to a little bit more in the city around building facades was another project we're tracking. The building facades team have got some really good people on board and capacity to roll into that. Again, another ECI contract takes 6 months to sort of ramp up your full team. So plenty of time to get into those works.
Another question there?
Chris, just firstly, just following on from John's question, no numbers, what growth area excites you most? You've got fuel, you have energy.
You know I'm going to list every sector, right?
It's going to insult the team.
I think like the energy, and I think this is probably with everyone probably sees it as energy and defence probably command. And I'll say that because if we come for an hour session with fund manager or broker or we talk about probably those 2 more than others, and I understand that, I get that. So defence, you can scale up pretty quickly because you're using a subcontractor network, and so margins down a little bit, but the scale of the opportunities is huge. And to a customer that values what we value, and that's going to be quality, safe outcomes, timely as well. And then you go to energy, and it's got the same drivers really. So I think they're probably 2 that are going to sort of burst out a little bit before the others. But the others, having said that, are quite steady, and we've got we've been in all those areas as well for some time. So and emerging, by the way, is another interesting one. I've now definitely listed all of them. Emerging within there, we have the marine sector and the water, wastewater, they're quite big. So yeah, that side will sort of do some really good things as well.
I suppose, I guess, recently there's been a transaction, Eptex Defence Division got acquired,
yes.
Private equity. Does that help with pricing regarding being more rational behaviour, regarding pricing defence work? Portfolio recently was won by Eptec through aggressive pricing. Is the market more rational now?
I don't know about them exactly, right, because I don't think we've bounced into it. I mean, we have on one major project, maybe it was a bit different. So I probably wouldn't comment on that directly, but just the area, when you do have a busy industry or sector, you can, rationalisation of, people probably are less inclined to do, lower prices, right? And I think what's happened too over the years, we've seen a couple of the big companies go broke, and it affects clients. Like I remember years ago, clients saying, if somebody went broke, it wouldn't really matter, we'll just get somebody else to come finish the job. But that attitude does not occur when you deal with end users, because it does matter. If you falter on one of those big sites, it is dramatic for the client. So what we like about where we work is that these lower prices are generally pushed aside to make sure you are capable, the company. So we're up against people, I think, that are not in that zone of driving prices down. So that's probably a general way to hopefully answer that.
Yeah, that's helpful. And Christian, because I've noticed in the past, 2 years, mining, industrial revenue has been trending down. The outlook has stayed pretty robust.
Mm.
Can you explain, I guess, what's happened now? The customer's not spending as much in regards to the maintenance capex cycle that they're under, or what's been happening regarding revenue and I guess your outlook in mining?
Yeah, it's interesting. Not spending as much in order to prepare to spend more is probably the story there. You know, you took at Rio Tinto sustaining capital portfolio, something like 400 million a year just on blast and painting assets, and that's been tied up in this procurement process. So inadvertently, they've meant to spend more and ultimately delayed the spend. So we don't see that coming off, because there's more and more assets going into that level of maintenance requirement. So actually that maintenance debt is building up, and they'll have to sustain that. And again, getting more and sweating their assets means more investment. But it has impacted our ability to, wouldn't say it's been years of regression, but you know, certainly over the last half, we've seen a bit of a drop off in that area. Very confident with that client going forward, and then you know, some of the discussions we're having with BHP as it stands right now, and the portfolio we're building with them is really positive, and that's another major miner that we haven't done a huge amount with. Roy Hill, again, relatively new assets, starting to come into their initial maintenance stages, so their spend on their total addressable market for us will increase with them, as will FMG. So, yeah, we're confident going forward. You know, that we'll see some good outcomes in that area.
I'll sneak one in. Building facades. There's been lots of pass-through from building products and diesel costs in the building and construction space. What exposure does Duratec have before passing along these costs to the asset owner?
Yeah, I can probably take that one. We're probably not that exposed. We're not in new construction in that field. Like most of these projects are all remediation. So you're talking about cementol products, some ACPs. A lot of that is already built in. It's only a certain portion of the actual total contract value as well. So the exposure isn't significant. Definitely needs to be monitored. The good thing is in building facades, you know, we're not using generators and fuel-consuming things that are plant equipment. And if you're using some stuff, it's could be subcontractor driven as well. So it's quite a diverse way of mitigating that risk. So is there some? Certainly, I'm sure there is, but it's not significant.
Appreciate it. Thank you.
It's worth talking indexation, because that whole fuel question, I'm sure will come up again at some point, but a lot of our contracts have got indexation in them. All of our defence contracts generally do. A lot of the B&F contracts do, and you're building that in through the ECI phase when you talk about, do you want us to price in this horrendous risk for escalation materials associated with volatility in the market, or do you want to agree to manage that risk together and reduce your immediate costs, and then we'll just address it if it comes up. So yeah, that exposure is relatively minimal. I think the mining sector is one that we probably have a bit more exposure to with the rates-based contracts we have, and you know, supply. But you know, all the major miners they're getting their fuel directly from the refinery, so they're not dependent on any Australian policy whatsoever. They've got terminals built in Port Hedland and Carmarthen. They're bringing it straight in with the ship. In fact, if you start monitoring those ships, you'll see those ones that seem to be fine, that are getting to the major miners. Some of the juniors might get caught out. That's a bit of a risk, and we're monitoring, like Greg said, we're monitoring that on a weekly basis, just trying to stay in front of what everyone else here in this room is no doubt tracking as well, as you know, whether or not it's going to have a enduring impact on us.
And probably a part of that is any current procurement or estimation periods that we're in now, we're already ratcheting that down to our project teams to make sure, and estimating teams to make sure we're addressing that in our any proposals going forward to any clients from now on. So we can react very quickly to proposals that are getting put to clients right now as well. So just as a further mitigation sort of step.
Yeah, and because we do lots of those small to medium ones, you know, the rate moves on pretty quick. So if it's a 3-month job, that risk is lessened. So there'll always be, every company's going to cop a little bit of cost from the immediate impact of a fuel increase. I mean, ultimately, we're probably in the best place for you know, longer term or medium term anyway, in the sense of fuel facilities now have an eye on them. This is all over Australia and in New Zealand, for that matter, all the places we're at. So I think it's, you know, for what it's worth, probably going to be beneficial to us in that term. But the short term, we'll just work our way through any of these immediate ones. But of all companies, we're probably on the lesser end of fuel exposure. Definitely.
Have another question on Slido here from Anonymous. Can you talk to the contracting risks you will and won't take on with these large defence tender opportunities?
Yep. It's the same contract we've signed up to for forever. It doesn't change largely, so they're relatively well known. There's good protection under that contract for indexation, for latent conditions, for delayed access. The security provisions for bonding is relatively low, 2 times 2.5. Cash is 10 days after invoice.
Yep, I'm going to say that payment terms are very good.
Yeah, so I mean, the areas you can come unstuck, I guess, would be if you haven't priced the job properly. But we've had a good 12, 18 months on these ones to fend over the drawings and documentation, understand the risk, plus we've got 10 years plus experience on that island. And we've got a really good understanding of the interfaces with Navy and those sorts of things, which would all be compensable anyway, but you don't want to walk into those sorts of problems without understanding they're coming. So that covers that.
Any other questions out there in the audience? I'm not sure how much time we've got there, Adrian. 15? Okay, well, I've got a couple of questions here I can throw out. Oh, hang on, there's one.
This presentation and the previous one, I met a number of guys who'd sold their businesses to Duratec. And what fascinated me, how enthusiastic they were to continue to build that business within Duratec. I find it quite astonishing for a guy who's got his own business, his own trajectory, and doesn't have to answer to any other bosses, taking on working for the larger group. It sounds like you've got a very good secret sauce. Can you explain?
Yeah, that's a great question, and super proud of that. And hopefully that's experienced through all of the people that sell to the business. And if I used a word, it'll probably be passion. Perhaps would be the first one, that they hopefully feel our passion about what we're doing, and you buy into it. Yeah, we spend a lot of time on that culture element when we're looking to buy a business, and you've got Mitch Wilson at the back there, who's son of Mick, the owner of the business, and we spent a bit of time, like Nigel worked with Mick and Braden, the boys, and the weird thing is it works in both ways, right? It motivates the rest of us at Duratec too. Like when you buy a business, it's absolutely works both ways anyway. That we get motivated, we put that effort in. There's Aaron here from RGK. We could list all of them, I think, and I don't think we'd buy a business unless there's an element of that, or a strong element. So, and what happens there too is it just ultimately the businesses run themselves with a little bit of guidance. So I think what we're doing there is sort of freeing up, giving freedom to that person or the group of people that have sold, where they lose that probably direct responsibility where their house might have been on the line. So we can sort of and hold the passion that they had as to why they started that business in the first place. So if we get that right, it's just super enjoyable to be part of on our end, and you could imagine that flows through to that person and the people they employ. So yeah, it's great to see that spill over to other people to be able to see that. But it's I think that's why we do it and why we like these acquisitions. Dan's the other one, from EIG, who's here, who's just added so much value straight away in that space as well from acquisition.
Yep.
Yeah, it really does get us excited, and those three people are in this room today. They'll be at the back in 10 minutes' time when you finish, so pin them to the wall and ask them a lot of questions and find out how passionate they really are, but be prepared to be with them for a long time, because it just oozes out of them. it's we do love that space there. Couple of other, unless there's a question out there, I'll throw one or two. We've probably only got a couple of minutes left. Update on large projects, we've already done that. Duratec, concern about fuel shortages, I think we've covered that. Capacity to deliver upcoming large projects, we've covered some of that. Is any other questions there? I'll keep going through. Sector growth, we've covered that. Nigel, there was Watsia, a resounding success for WPF. Where does that take you?
Oh, look, it's good. It's good to have. I don't know if you saw the makeup there, but there's a fabrication package. There's some on-site supervision packages. There's also some SMP installation packages. So I think the most exciting part about that project that's coming to us at the moment is the different areas and different relationships that have come together. And I think that's really part of what we're trying to spell out there within the energy sector, especially, is that in this service agreement type area where we're not often tendering with a 12-month lead-in or anything like that. We're really building on relationships in those areas, and within relationships you must have the capacity to deliver and you must be known to deliver, and that's what we're starting to build with all these clients across the board. And I think that that project in particular, or the Waitsia, next phase of Waitsia, it's strategically important because all the clients or all the individuals on the client side have all come from other areas that have worked with WPF or Duratec somewhere else before and have come together and almost sought out the team to come and do their project for them.
Thank you. Any last questions before we wrap up? Yes, please.
Just one on the pipeline and the amount of ECI work that's, just the amount of ECI proportion that's in the pipeline at the moment and what that is now relative to history. Have you got more work that's in the pipe that's ECI? Or?
Yeah, so if we look at the tender section, so the 1.8 billion there, that we've called that out to be over a third, so 600 plus with that. And you can see quickly that's tied up in a few defence projects. So yeah, we'd be well over a third there. And if you go to the pipeline too, that number, 4 billion, to me that can always be a lot more, but we want to make sure that they are things like that can be ECI. So if we look at, say, Papple's Perth Airport, that's not really sitting in tenders just yet. That's sitting off in the pipeline, which will be moved across to tender, and then obviously across if we are successful in that ECI. So the far right hand, if we've got that right, at 4 odd billion, it's hard to exactly say what ECI content's in there. It's really when we shift it from the 4 odd billion into the 1.8 billion, that's what we want to manage and work to the best we can to get that ECI content up. And you'll see, whatever we can, we will, and we will be right at the very front with MEND, trying to get those projects wherever they are into that position, but not all of them go that way. There'll be plenty of clients that want to design elsewhere, things that don't have time pressure or other pressures that are there. So we're always going to tender them as well for end users that we like working for. So I think 1/3's good. If we can get that a little bit higher in time, that's good too.
Are there other major projects that you've talked about today that are within that pipeline but not in the tender bucket?
Oh, Greg may be able to answer that.
Nigel, maybe.
Sounds like this is getting passed around a little bit. I can't think of
Tristan
one.
Tristan definitely will be.
Maybe.
Yeah, there'll be a few.
Couple
Yeah,
of Hunter
because
Valleys.
where that occurs is where we're only pricing the ECI phase, which is only 5, 2, 3, 5% most of the contract value. So Papple's an example of that. So it sits in tendered, hopefully won shortly. And then we still spend the next 6 months probably nailing down the delivery phase costs. And once that's nailed, then it moves into tendered work from pipeline.
Yeah.
So yeah, offhand, I couldn't roll out a couple more projects. Probably wouldn't anyway. But yeah, certainly
There actually are quite a number.
Yeah.
And so what we're doing with those is we're doing capture plans with them. So in our business development phase, that is. And we're providing capture plans, and I've got the BD team red hot going in, finding out, and some of them are spends instead of projects. So for instance, $20 billion spend in Henderson. We're not going to get $20 billion worth of work, but where is our work in there? So I've got all the BD team in there ferreting around, finding out our scopes. So we've got about 12 major capture plants now around Australia. And so that's what that represents. We know there's a job or a spend, but we don't yet know how that transfers into our tenders bucket. So tenders is things we are actively working on with a client. So it's real things we're working on. That's what tenders is to us.
I think to add to that though, we are seeing an increase in ECI percentage. There's no doubt. Like you got defence went from design and construct only to ECI. So that's a whole massive part of our client base it's gone across into those types of contracts, and we're seeing it almost all of the building facade projects in our ECI, as opposed to probably it was 50-50 at one point. Energy is probably still a TBA for us. So I think we probably haven't quite figured out how some of like the works that Nigel talked about in Newcastle, that ultimately will be a type of ECI engagement, I suspect, going to MC if we're successful.
Yeah, we'll probably start to see some of that in the early space around, with what DXP is doing in the decommissioning space and those sort of areas. We might see a bit of that come through. I think, I'm not sure if it will be formal ECI though, it might be just engineering and early stage engagement.
Yep.
You got an RGK with that as well into the energy, being able to monitor some of the pipes, and so it'd be great to have a look at that technology and what that can lead into. So that'll just increase the ECI content, the MEN content into the energy space as well as we go forward.
So just for resourcing in MEN, you went from 35 to over 60 people. How much of that was organic versus RGK, and where do you see, I guess, the headcount in that business moving over the next 12 months, given what you've got in front of you?
Yep. Liam.
So 20 is RGK and the balance is
Organic, yeah.
Yep.
We're unique beasts, so we're pretty slow to grow, but people with that space organically. But RGK will be a much more rapid growth because it's much more labour focused.
I think there was a hand up at the back.
Guys.
Yes.
Chris.
Eric?
MSAs you haven't spoken about too much in this day. Can you just talk about, along the same lines as the ECI question, how much you expect MSA growth to come in through over the next little while? And I know it's sort of, you keep it outside of those wagon wheels. So how much we should be expecting to get out of MSAs going forward?
Yeah, it's probably just missed the attention for no reason. We just didn't pick it up, but it's an absolute feature of our business. It's littered everywhere, but it's generally going to be in the energy and the mining sectors. So we absolutely see that growing. And what we've got to do there too, if we win some of those major projects, we want the percentage to stay the same. So when our revenue creeps up, our percentage holds, which will give a volume increase. So that's just going to occur to me, because if we're still in mining doing really good things with all the MSAs we've seen, what we're doing more with Hancock, FMG, BHP for that matter, than we ever have, really. We just haven't had probably the major projects come in there. So we think that will grow quite nicely. Into energy, it'll definitely grow. So we'll pick off a few bigger projects, but the MSA side of the business will grow. I think Quantum is a really interesting project we've won recently, which is just a pure sort of MSA play for those 12 tank farms around Australia and New Zealand that we've been activated on 3 of them nearly instantly. And obviously what's happened, we were dealing with them, trying to get that MSA well before what happened in the Middle East, but that just puts a spotlight on it, where they just have to hold more fuel or want to hold more fuel, and things need to be updated to do that. So there has been some redundant tanks floating around in all of these locations that just need to be turned on. So that's just really good stuff, all MSA stuff.
Okay, thank you very much. There will be a display up here with Liam and RGK perhaps, and RGK may be at the back. And there's some other things. Walk around, talk to everyone. Thanks very much for your attendance. Really, really appreciate it. Yep. Thank you.
Thanks to everyone for turning, for your attendance. Thanks to our team, by the way, in the panel, the presenters. Thanks to all the people behind the scenes that helped make this event happen. That's generally the Sydney crowd. Liam's going to come straight up here and go straight into a demo hub. So this concludes the formal part. But if you want to stay, have a look at some of these 3D models and make your way to the back. Thank you again.